Welcome to this deep dive. We're here to pull out the crucial insights from the latest research, giving you a clear picture of what's happening now and what's coming next.
That's right.
Today, we're digging into a really detailed report. It's all about the global market for servicing medical imaging equipment, looking ahead all the way to 2033.
Yeah, it's a vital area. Our goal is basically to map out the key shifts, the dynamics in this sector.
So we'll be looking at market size, growth forecasts, regional differences, the whole picture.
Exactly. We want to guide you through the main forces shaping things without getting bogged down in endless data points. Think of it as your quick guide.
Okay, let's kick off with a number that, well, it really jumps out. The global market for keeping this equipment running, it's estimated at, what, USD 24.68 million in 2025?
That's the figure.
Yeah.
But here's the kicker.
Go on.
By 2033, it's projected to climb over USD 35.6 million.
Wow, that's quite a jump. That tells you something, right?
It absolutely does. And what's really interesting is where that growth is happening most strongly.
The regional variations.
Precisely. So, North America. It's got the biggest slice right now, over 40%.
Okay.
But looking ahead, the Asia-Pacific region, it's expected to grow much faster. We're talking a CAGR of 7.4%.
7.4%, that's significant. Definitely suggests a shift in the landscape.
A major rebalancing, potentially.
So our mission here, for you listening, is to make sense of all this. We'll spotlight the key trends, the interesting bits, keep it clear, keep it relevant. Ready?
Let's do it. So first, just to ground us, that overall market size again. For 2025, globally, it's USD 24.68 million.
Got it. And the projected figure for 2033?
That's the USD 35.6384 million.
Okay, so what's the overall growth rate driving that climb?
The report calculates a global compound annual growth rate, the CAGR, at 4.70% for that period, 2025 to 2033.
4.7% globally, a steady upward trend.
Yeah, and it's fueled by a whole mix of factors, which we'll unpack as we go.
Right, let's zoom in on the regions then. North America, the current leader, what are the details there?
Okay, North America. 2025 estimate is USD 9.13 million. That's where the over 40% share comes from.
And a growth rate, the CAGR.
It's projected at 3.2% between 2025 and 2033. More moderate, you could say.
So a mature market. Steady, but maybe not the explosive growth we see elsewhere.
That seems to be the picture, yeah. Still huge, but growing at a slower pace.
Can we break that down within North America, the U.S., Canada, Mexico?
The U.S. is the big one, naturally. Estimated at USD 7.20 million in 2025, with a CAGR of 3.0%.
Okay.
Canada is next, projected at USD 1.10 million in 2025, but with a slightly higher CAGR, 4.0%.
Interesting.
And Mexico, also important, around USD 0.83 million in 2025 and a 3.7% CAGR.
So the U.S. dominates, but Canada and Mexico showing a little more growth momentum, relatively speaking. What's driving demand across the region generally?
The few key things, according to the report, a big focus on preventive healthcare, quick adoption of new advanced imaging tech, plus the high prevalence of chronic diseases, sadly, and also the strict regulations they have there.
Got it. That makes sense. Okay, let's hop across the pond. Europe. How does it look there?
Europe's also a major player, holds over 30% of the global market. The 2025 estimate is USD 7.16 million.
And their growth.
The projected CAGR for 2025 to 2033 is 3.8%, so slightly faster than North America.
Okay, another big market, slightly more momentum.
Yeah.
Are there specific countries standing out in Europe?
Yeah, definitely. The UK, for instance, projected at USD 1.20 million in 2025 with a 4.6% CAGR. The report links that partly to the aging population.
Makes sense.
Germany's another key one, about USD 1.42 million in 2025, CAGR of 4.0%, likely driven by their, strong tech adoption.
Right.
Then you've got France, Italy, Russia, Spain, all significant. Even smaller places like Luxembourg show decent growth, 4.1% CAGR from a smaller base.
So quite varied across the continent. What are the big picture drivers for Europe as a whole?
Similar themes, really. Chronic diseases, the push for early diagnosis, that's big everywhere.
Okay.
But in Europe, the report also highlights the impact of new tech integration, AI, cloud computing and imaging, that's making waves.
Oh, interesting.
Plus, regulatory demands, budget constraints pushing towards outsourcing service, and yes, the aging population is a factor across much of Europe, too.
Okay, clear. Now, the big one you flagged earlier, Asia-Pacific, the growth hotspot. What are the numbers?
APAC, yeah. This is where the action is, growth-wise. Projected CAGR of 7.4%. That's the highest by far.
Wow. And the 2025 market size?
Estimated at USD 5.92 million, so roughly 23% of the global market, but growing fast. Real dynamism there.
That 7.4% is striking. Which countries are leading the charge in APAC?
China's a huge factor. Estimated USD 2.49 million market in 2025. CAGR around 6.9%, driven by massive healthcare infrastructure investment.
Right.
And India really stands out. CAGR projected at 9.3%, starting from about USD 0.59 million in 2025.
9.3%. Incredible.
Right. It is. Then you have Japan, South Korea, Australia, Southeast Asia, all contributing significantly to that overall fast growth.
So what's fueling this boom across the Asia-Pacific region?
It's a powerful mix. You've got the familiar drivers, chronic diseases, demand for advanced diagnostics, but also strong government healthcare initiatives are key in many APAC countries. Big investments in facilities, and they seem particularly keen on adopting AI in imaging.
And the demographics.
Right, large and growing populations, plus aging in some key countries like Japan and China. It all adds up to more demand for services.
Okay, let's shift gears. South America. What's their slice of the pie?
South America represents just over 5% of the global market. Estimated size in 2025 is around USD 0.94 million.
And growth.
Projected CAGR is 5.4% for 2025 to 2033. So healthy growth there, too.
Solid rate. Key countries in South America.
Brazil's the largest market, about USD 0.4 euro million in 2025, with a 6.0% CAGR. Report links this partly to its growing elderly population. Argentina is also significant, USD 1.16 million in 2025, and a strong 6.3% CAGR, possibly tied to rising incomes, better healthcare access. Colombia, Peru, Chile are also in the mix.
What's driving the growth down there?
Well, rising healthcare spending overall is a big one. Chronic diseases again, demand for better diagnostics.
Right.
But also, interestingly, the report mentions aging equipment that just needs more servicing to keep going.
The installed base factor.
Exactly. Plus expanding infrastructure, government programs, and a shift towards value-based care.
Got it. How about the Middle East?
Middle East is around 2% of the global market, estimated size. USD 0.99 million in 2025.
And their growth trajectory.
Pretty strong. Expected CGR of 6.0% from 2025 to 2033. Good momentum.
6%. Okay. Which countries are notable there?
Saudi Arabia leads USD 0.35 million in 2025, 6.3% CAGR. The UAE and Turkey are also key markets, growing even faster, around 6.5%, 6.6% CAGR respectively.
Why the strong growth in places like UAE and Turkey?
Report points to big healthcare investments, especially in Qatar, 5.5% CAGR, and Saudi. And in Turkey, it seems linked to rapid tech advancements in medicine. Egypt also shows solid growth around 5.8%.
And the general drivers across the Middle East?
A lot of it is investment-led. Big money going into healthcare infrastructure, expanding facilities. Demand for advanced diagnostics is rising, too.
Chronic diseases factor in.
Yes, that's mentioned, too. Plus, government efforts to modernize healthcare, including AI adoption.
Okay, last region, Africa. What's the picture there?
Africa holds the smallest share currently, maybe 1%. 2025 market size, around USD 0.54 million.
But growing.
Yes, projected CAGR of 5.0% for 2025-2033. So definite potential, even from a smaller base.
5% is still respectable. Any specific countries to watch in Africa?
South Africa is the biggest market there. About USD 0.19 million in 2025, with a 5.9% CAGR.
Okay.
Nigeria is interesting, too. Smaller base, maybe USD 0.04 million in 2025, but growing at 5.2%, possibly linked to adopting newer technology.
And the drivers across Africa?
Again, chronic diseases, need for early diagnosis. But also, basic infrastructure expansion is crucial there. Government initiatives improving facilities, investing in radiology,
Right.
and AI adoption and telemedicine are mentioned as contributing factors too, helping bridge gaps perhaps.
Okay, that's a fantastic tour of the regions.
Yeah.
Now let's slice the market differently. Let's talk about the types of services offered. What are the main categories?
Right, segmentation. So the report looks at things like routine equipment repair and maintenance, obviously, selling refurbished systems,
Okay.
technical training for staff, equipment removal, relocation, and, crucially, software upgrades.
Right. Which of those service types has the biggest market share right now?
The report suggests technical training is likely the largest segment currently.
Training. Why is that?
Well, think about it. These systems are complex. You need skilled people to run them, maintain them properly.
True.
Plus, there's ongoing demand for preventive maintenance, meeting regulations, and it's often more cost-effective long-term if your own staff are well-trained.
That makes a lot of sense. Okay, what about the fastest growing service segment?
That would be software upgrades.
Ah, software again.
Yeah, it's huge, driven by the need for better accuracy, more efficiency, integrating AI,
Right.
plus the whole digital health trend, regulatory changes, cloud solutions, machine learning, remote diagnostics. It all pushes demand for updated software. The hardware might last, but the software keeps it cutting edge.
Fascinating how central software is becoming, even for servicing hardware. Okay, let's switch perspective again. What about the imaging technology itself, the modality? How's the service market segmented there?
Good question. Key modalities include CT, MRI, X-ray, ultrasound.
The usual suspects.
Yeah. Plus molecular imaging, think PT, SPECT scans, nuclear medicine more broadly, radiopharmacy services related to that, and other niche techniques.
Which modality service segment is the largest currently?
Molecular imaging services seem to hold the biggest share right now,
Why molecular?
mainly because these tools are so vital for early, precise detection of things like cancer, neurological issues. Demand is high.
It's driven by.
Rising chronic diseases, tech advances in molecular imaging itself, aging populations needing these diagnostics, the push for preventive care, and AI helping enhance the images.
Got it. And which modality service needs are growing the fastest?
That appears to be computed tomography, or CT,
CT services are booming.
expanding rapidly, yeah. Driven by rising healthcare spending globally, demand for early diagnosis across many fields,
Right.
advances in CT tech making machines more complex, needing more specialized service, plus chronic diseases, aging populations again, all mean more CT scans, more need for maintenance and upgrades.
Okay, let's look at who's providing these services. What are the main types of providers?
Basically, you've got two main camps: the original equipment manufacturers, the OEMs, the companies making the machines like GE, Siemens, Philips.
The big names.
Exactly. And then you have independent service providers, or ISPs. These are third-party companies specializing in service, often across different brands.
And who has the bigger share of the service market right now, OEMs or ISPs?
Currently, the OEMs command the largest share.
Why is that?
Well, partly because people are buying the new equipment and often bundle in service contracts right from the start.
The service contract model.
Exactly. Plus, the installed base of your machines is huge and aging, needing ongoing OEM support. They offer specialized solutions, ensure compliance, extend equipment life, and integrate their own tech advances in AI. It keeps customers locked in to some extent.
Makes sense. But what about the independent service providers, the ISPs? Are they making inroads?
Oh, yes, absolutely. The ISP segment is growing rapidly.
What's driving their growth?
Primarily cost effectiveness. Healthcare providers are always looking for ways to save money on maintenance and repair.
And ISPs are often cheaper.
Often, yes. They offer competitive pricing, sometimes faster response times, and specialized expertise, maybe on older or multi-vendor equipment. For many hospitals and clinics, they're becoming a really attractive alternative.
Plus, the overall market growth helps them too, presumably.
Definitely. More equipment out there, aging equipment. It all creates more demand for service, benefiting both OEMs and ISPs, but particularly fueling ISP growth.
Okay, final segmentation piece. Who are the customers? The end users buying these services.
The main end users are hospitals, diagnostic imaging centers, and then smaller clinics or specialized facilities.
Which of those accounts for the biggest chunk of the service market?
Hospitals. By far the largest end user segment right now.
Why hospitals specifically?
Volume, really. High rates of chronic disease needing imaging, continuous tech upgrades requiring service, the absolute need for equipment uptime for patient care.
Can't have scanners down.
Exactly. Plus, strict regulations in hospitals and the drive for optimal performance push demand for reliable service.
What about standalone diagnostic centers? Are they a growing customer base?
Yes, very much so. Diagnostic centers are a rapidly growing end user segment.
What's driving their need for service?
They need constant maintenance, upgrades, calibration across all their machines. Rising chronic disease means more referrals to these centers.
Right.
Plus, tech advances, regulations. They need top quality imaging, cost efficiency, and want to make their equipment last. So they rely heavily on service providers, both OEM and independent.
Okay, fantastic breakdown. We've looked at size, regions, segments. Let's pull back again.
Right.
What are the main overarching drivers pushing this whole market forward?
The report really boils it down to three key things. First, the rising prevalence of chronic diseases globally. Cancer, heart disease, neurological conditions. Imaging is crucial.
Creates sustained demand.
Exactly. Second, the general rise in healthcare spending worldwide. More money flows into equipment and therefore into servicing it.
Makes sense.
And third, the emergence and really the adoption of AI in radiology. This creates new needs integration, software updates, specialized maintenance for these AI systems.
Powerful forces indeed. What about the other side? Any major restraints holding back growth?
Yeah, a couple are mentioned. One is simply the high cost of many imaging procedures that can limit how many get done, which might indirectly affect service demand.
Access and affordability.
Right. The other big one is the shortage of skilled professionals, especially radiologists, needed to operate the equipment and interpret the images. If you don't have the staff, you can't fully utilize the machines.
That's a bottleneck. Okay, you mentioned competition earlier. It sounds intense. Who are the really big players?
It is highly competitive, yeah. A mix of global giants and regional specialists. The report lists names like AGFA, Althea, Canon Medical, Carestream, GE Healthcare, Hitachi, Hologic, Philips, Shimadzu, Siemens Healthineers.
The household names in medical tech.
Pretty much. Plus others like Universal Hospital Services, TriMedex, United Imaging, Mindray, Drägerwerk.
Yeah.
It's a crowded field.
So how do these big companies stay on top? What are their strategies?
Often it's about having a broad portfolio, cutting-edge machines, and comprehensive service packages. A one-stop shop.
Right.
Strong global distribution networks are key too. And just relentless innovation both in the hardware and the service side, often integrating AI now.
And the report noted some recent competitive moves.
Yeah, a couple of examples. Canon Medical bought a Danish X-ray company, Nordisk Röntgenteknik, back in March 2022. Seems like a move to boost their X-ray business.
Strategic acquisition.
And Philips got FDA clearance in May 2022 for a new high-performance MRI system, the MR7700. Highlights that constant push for better tech, better image quality.
Okay, we have covered a ton of ground. Let's try and synthesize the key takeaways for everyone listening.
Absolutely. So first, this global market for servicing medical imaging gear is big, nearly USD 25 million in 2025, and it's growing significantly, heading towards over 35 million by 2033.
But the growth isn't uniform. Big regional differences, right, with Asia-Pacific really accelerating.
Exactly. APAC is the standout for growth rate. We also saw that within the services, technical training is currently large, while software upgrades are growing fastest.
And modality-wise, molecular imaging services have a big share now, but CT services are expanding rapidly.
Right, and you've got this dynamic between the OEMs, who still dominate the service market, and the fast-growing independent service providers offering cost-effective alternatives. Hospitals remain the biggest customer, but diagnostic centers are a rapidly growing segment.
So understanding these dynamics, the growth, the regional shifts, the segment trends, it really provides crucial context, doesn't it? Whether you're in healthcare, tech, or investment.
Definitely. It helps you see where the opportunities are and maybe where the challenges might lie ahead.
Okay, so as we wrap up this deep dive, here's a final thought for you to chew on. We've talked a lot about AI advancements and the increasing sophistication of imaging tech.
Yeah, it's moving so fast.
So how might that change the balance? The balance between healthcare facilities doing their own servicing versus relying on these specialized external providers, OEMs or ISPs. Will AI make in-house service easier or demand even more specialized external help?
That's a great question.
And thinking about the people involved, what kind of new skills, maybe completely different skill sets, will become essential for the technicians and engineers maintaining this next generation of incredibly complex AI-driven medical equipment?
Yeah. The workforce implications are huge. Definitely something to watch.
It certainly is. A fascinating space. Thanks for joining us for this deep dive.